What's up? Good morning, or good afternoon, wherever the hell you are in the world. And here we are. Markets are under pressure once again. And if you recall on Tuesday, I said that look for about 500 points down, and we've now achieved that 500-point move. In fact, we're down more from the top at 34.97. We've got down to 34.339, so a little bit over 500 points. I would be expecting some sort of a bounce here. I do believe that the markets are in pretty big trouble, but I do think that there's probably a bounce coming. You know, you get these out of nowhere, you get these short covering rallies, you get that. But I would suspect as we go into the triple witching cycle, which today starts the rollover in the futures markets. And we'll get up to into the September expiration of options. I would expect to see more volume, and remember we talked about it going to get busier. Well, it's been a little bit busier, but we're not seeing a ton of volume yet. But again, I think that'll start to show up back again next week, and then we'll see what the real direction of the markets are. But I think as you look, at the Dow. I mean, this is a perfect spot for it to come back and hold and maybe bounce from it. Again, I'm not getting bullish to be a buyer here. I'm just making you aware of things that you might want to expect in the market, and maybe to keep you out of a bad short position if that's the kind of side of the trade you like to make. The S&P has room. It's kind of in the middle of nowhere, but certainly we could look at this as a potential support level. I was trying to get an R in there, but again, but it wouldn't be a surprise if it came all the way back down to the bottom here either. The NASDAQ, or the same thing, right? So again, I'm not saying we're going to bounce, but I would not fall off my chair. I would not be surprised if we did see a bounce. Of course, the Russell fits into the same category, although it's been a little bit more pressure, but here it is, right on the dead nuts bottom. So you can see the markets are probably in a little bit of trouble, a little bit of an issue. I think that as we watch, you can see the VIX. Where does it go? Okay, there we go. You see the VIX has popped a little bit, right? A little bit of a V-shaped bottom. Now again, I said to you that by next Tuesday, I thought we'd be somewhere up near 18 again. And we're on our way. And again, one of the things you want to remember about this kind of action, this volatility index right now is a little bit softer and not going straight up or spiking straight up, which would also tell us that there may be a lot more selling behind this. This has not been a panic sell. This has been pretty steady, and as you look, around the board, you see Apple came down to some support and popped a little bit. Amazon is holding up very nicely and very well. Coin, which is obviously Bitcoin, has been holding. So you're seeing reasons to potentially believe that a bounce will come. And like I said, I'm not telling you not to play for it. I'm not going to. I'm going to wait for an opportunity to sell more. NVIDIA is one we talked about a couple of weeks ago after the earnings, and notice where it's gone from. So I think one of the things you want to remember is the logic behind the market. Okay. There's a lot of things that go on every day, and trying to understand the market price action and the market activity, I think is important to all of you as traders, investors, as you look, because again, there are certain things you should learn to expect, which will help keep you out of harm's way when they happen. Okay. And this is something that, we want to make sure that we understand is what we're expecting. Okay. And not because of some shit news item you saw, okay, or read, but because of the actual price action of the market. Remember, the markets are all about price. That is really what you're watching is the price action in the market, okay? Because that's all that really means anything to you, okay? Everything is about price. Okay, that's all that we are really concerned about, or all we really care about is what is price. Okay, so you got to forget about, we know the economy's in bad shape. They can tell you whatever they want. We're in a recession. Okay, there are economists that say that we've been in a recession since Q4 last year, which is what I have always said. Again, I don't believe in what economists say. I think they're all full of crap. Okay, you remember, when you start to listen to advisors on TV, and they have an agenda to sell advertising, they have an agenda to raise money, they have lots of agendas, do lots of things. That's not what you're here for. You're looking at a market, trying to decipher what's going on within that market. So any chart that you would pull up, you should have a general idea of what are the levels. So you can see that obviously my charts are always marked up, but so I know that in my mind that in GLD support's about 177, resistance is about 181. Okay, so what do I want to do? Well, if I'm looking at this chart, the only thing I'd want to do from here, okay, if I were going to do anything, would be to be a buyer. Now, I'm not telling you that I'm dying to jump in and buy it, but I'm certainly not a seller. You want to remember to stay away from buying trying to buy tops and sell bottoms. It's not a very profitable strategy. All right, and when you see a market either at resistance or at support, you'd like to go the opposite. If you're going to make a trade, if you're going to trade gold here, you want to be a buyer. And I'm not recommending you be a buyer, but if I'm going to trade it, the only logical side, the highest probability side, is for a little bit of a rally. Okay. Conversely, if you're looking at something that is running higher, and I'm just trying to see if there's anything possible in this market right now that's running higher. Okay. But you'd be looking to sell resistance. Okay, here. Now here's a pretty bullish pattern for Meta, Facebook, ascending triangle breaking out. So there's really no trade. If I would be certainly happy to look at it if it came back down to 300, I'd look at it as a potential spot to buy it. Okay, now I'm seeing a little bit of resistance right here. I might look, and again, I'm not telling you to sell it. None of these are recommendations. All these are trying to identify points and spots in a chart to give you an idea of what you should be looking for. And again, I follow these stocks, every week, every day. And, you look at Tesla, well, Tesla, where's it at? It's stuck in a range. And of course, every time it's come down to the bottom of the range, it's gone back towards the top and vice versa. So if you look to trade that on either side, that's what you're looking to do. You are looking for the opportunity of what the market price action, indicates to you. And again, these are things that they have to become natural to your trading ability to become successful. You have to take out the opinion. You have to take out the process of, oh, well, there's bad news out there, or they had bad earnings, or they had this, or they had that. None of that matters when it comes to the actual trading of the overall market. Okay. That is something that you have to always remember, is that there are certain things that don't matter. Okay. And it always comes down, and what always matters is price action. Hey guys, I got to take care of an emergency real quick. I'm going to take a break here. I'll be right back. I got to go do something. Forgot. I'm going to step out for a break. sorry, I had to go sign for some gold and silver, some physical metals. You got to sign. You got to sign for them unless you want to get them want to get ripped off. So, in the meantime, so I'm back, and again, part of that is I like to buy physical metals. I don't trade or don't own the paper metals because the bottom line there is to me there is not enough gold in the world to cover the paper that they put out there. Okay, that's an opinion. I don't know that for a fact, but to me, the gold ETFs and all the stuff that promise you potential delivery are a bunch of crap. There is not enough gold in the world as far as I'm concerned, so I like to buy physical. Again, what you're trying to always create in the business is a well-rounded portfolio, okay, that you can develop for yourself, okay, and again, you're trying to always keep yourself in a position, depending on whether you're investing or whether you're trading, okay, there's a dramatic difference between the two, okay. Investing is something you're going to hold on to, and you're not going to use leverage or margin to buy an investment. You're going to buy with cash and money that you have, okay. If you are trading, you can certainly use leverage, and you can certainly trade bigger size because you know that you're going to exit. And the biggest thing that you never want to do is you never want to put a trade and an investment in the same box. And too many of you have bought, let's say you bought two stocks, okay? One you had intended to keep for an investment and one you were going to trade. And of course, as typically will happen, the investment moves right away in your favor and you go, oh, well, I'm going to take the profit. The trade, which you should have had a stop in and you didn't, was a loser, and you go, well, I'll turn it into an investment. And of course, the one that you wanted to buy and hold for an investment is still going higher today. And the one that you decide to turn into an investment that had no intention originally is still going lower. So again, that's not the idea, right? You have to have ground rules. You have to have a setup to what you're trying to do at all times. You have to have part of a trading plan. And the trading plan cannot be, you can never change the plan in the middle of a trade or in the middle of a sequence. Okay. That's why the plan is so important to begin with. When you get involved with something, you're going to buy Tesla. You want to buy Tesla. Okay. No problem. I got no problem. Okay. So if I'm going to buy Tesla for a trade, I got to know where my exit's going to be. Well, where's my exit going to be? Okay. Well, where would logically be a good spot for exit? Well, I know support's at about 240, right? Okay. So if I buy it at 246, 247, whatever, then my stop should probably be somewhere below 240 because that's a major level of support. And I cannot adjust that. If I'm going to adjust that stop, the only adjustment I can make to that stop is to move the stop up as the market is moving in my favor. And I'll give you a couple of live examples right now. This morning, when I was live trading with members, okay, we were trading in crude, and we bought crude down here, and we worked our stop out. We got stopped out somewhere up in here at a profit. We bought it again, got stopped out again, but we got stopped at a profit. So the only time and the only way that you want to adjust your stops is in your favor to cut down on the amount of risk that you are taking. Okay, let me just looking here. See, the other day we made a trade. Remember? So let's see. I don't know if there's any trade showing up. Not really, but we'll see. But if something shows up, we'll trade it. But so again, remember that the only time you adjust that stop is when you're going to adjust it into your favor. So you're going to reduce the amount of risk. I don't want to do that. Sorry. You want to reduce the amount of risk you're taking. You never increase risk on an ongoing trade. You have to reduce risk on that ongoing trade because again, this is a risk business. This is a money management business. This is a mathematical model that you're trading. Okay. If you think about it, okay, and look at the chart, all the lines that you see me draw in here and all lines that are here, what do they create? Okay. They create a geometrical progression. Okay. This is like looking at geometry. Go back to high school. Go to your geometry class. Okay. All you're seeing is rectangles, triangles, okay, and squares. I mean, this is all part of it. And that's how the markets kind of function. All right. So if you learn to understand that you cannot afford
to add risk to a current trade. You want to continue to reduce. That's what you do. It's you want to be able to continue to reduce risk at all times, because if you don't do that, then all you're doing is playing with yourself, and you're not going to ever make any real money because you're always going to be chasing your tail. Okay. So you look at whatever you're buying. Okay. Yeah, whatever stock or whatever thing you're trying to trade. Okay. If you're buying this, okay, then your stop's got to be somewhere below, and you have to have a level that has logic behind it. Why am I putting my stop there? Okay. Remember, you never want to put stops at whole numbers, okay? Like at 180, okay, or in a future at here. Let's take a look at the S&P future. Okay. Okay. So if let's say I bought the S&P future, okay, I'm not putting my stop at 44.50. I'm going to go below that. Okay. Certainly when it's like at 4,600 or 4,500 or 4,400, I'm never going to be at those numbers. Okay. As a stop. That's where lazy traders put their stops, and good market makers rip through those stops so that you get pounded. You go, oh, they picked on my stop. Nobody knows whose stop is where. Okay. All we know is that lazy traders, lazy investors always put their stops at some ridiculous point, which is usually on a whole number, which if you have watched the markets long enough, you will watch, then they get to a whole number, like let's say in crude, where's crude trading right now? Hold on. Crude right now is trading at 87.25. So if you want to buy crude at 87.25, you're not putting your stop at 8,700. Otherwise, you might just give your money away and just send me a check. Okay. You got to go below that 8,700 level, because I'm telling you, watch when it gets there. If it gets there today, watch, well, it'll go right through it. It may come right back and go back the other way, but it's going to go down to probably 86.90 before it goes back up, if it's going to go back up. So you have to be able to take more risk around those whole numbers, a whole number in a stock, 100, watch them, 50, 100, 150. Those are all big numbers that stocks make bigger moves for whatever reason. And of course, one of the reasons is that people are too lazy and they put their stops at those levels, and market makers are not going to let them sit there. They're going to run them. Okay. That is the part of the business that we're always watching. Okay. And that's what market makers do, because again, they're there to make money just like you are. Okay. And again, you look at certain things, and if I'm looking at, I can go to the grain markets. Okay. Here, corn, look what's happened. Every time I try to get up to $5, it popped and then it failed. Okay. So remember, it doesn't matter. All products are the same. Here comes platinum coming back down. Now, I would be looking personally, okay, to be a buyer at 900. Okay. And I'd have to use a stop. Where did I put my stop? Somewhere below 880. Okay. Because again, that's where the support level lies. Oh, I didn't show you. I'm sorry. Let me share that with you. That was my mind. Okay. Here's platinum coming back down, and I'm a buyer at 900. My stop's going to be somewhere below here, which is 880. Okay. Now again, is it perfect? No, it's not. Nothing is perfect. Okay. But again, you have to play probability. Okay. That's the only chance. That's the only leg up, or the only edge that you can create for yourself is probability. Okay. And if you're not doing that, then you're just giving your money away. Okay. Guessing and trying to trade from news and all this other stuff, trying to trade off fundamentals. I mean, yeah, fundamentals are fine if you're going to carry your position for the next 5 years. But if you're trying to make a trade, you think anybody cares about the fundamentals in the next 10 minutes? I mean, think about it. Does anybody care about the fundamentals when you're making a trade for 20 minutes or a half hour? No, nobody cares, because it has nothing to do with the reason or why you're trading at that particular time. So you have to use your head. Okay. You have to remember what you're trying to do here. Okay. And your objective, like all, is to make money. And how do you make money? Well, you put yourself in the best position at all times. And even when you're in the best position, does not always assure you or guarantee that you're going to make money. But at least you have a high probability, you have a favorability of making money, okay, because you're taking advantage of the math of the market. So as we go back and look back and see what's going on, and of course, interestingly enough, if you've been following the story of the BRICS and the new currency, well, my question to you is, if there's really going to be the BRICS and it's going to be the new big currency, why is the U.S. dollar making highs? Okay, and why is gold making lows? The BRICS is supposed to replace the dollar as a reserve currency. Okay, and of course they're going to use gold as a backing. So if you ask yourself, well, why? How can the dollar be going higher? It should be going lower. And of course, how can gold be going lower? It should be going higher. So there's your news item. Here's your fact. Okay, in the market. Okay, as you can see, that the dollar is going higher. Okay, and gold is going lower. How can that be when we're also worried about the BRICS and the end of the U.S. dollar as the reserve currency? Well, guess what? I call bullshit. That doesn't mean anything. The market will tell you when it means something. And right now, there is no concern that will have any effect whatsoever on the U.S. dollar. There is no concern that will have any effect on any market, and which is with good sense. Now, again, it doesn't mean that they won't create a currency, but it is not going to be the reserve currency. And that's another thing that you have to remember. Sorry. Forgot I was live. Anyway, so we look at the bond markets. What do the bond markets signify? Well, they tell you what interest rates are doing. When the bond futures go down, interest rates are going higher. They act as an inverse. Okay, so the key interest rate is the 10-year notes, which is what your mortgages are based off and everything else is based off. They're going down, the futures are going lower, which means that interest rates are going higher. It's that simple. Okay, now you can listen to all the crap you want from Jerome Powell that we're not going to do or whatever. And today there's a lot of Fed speak today. You can listen to all that crap. At the end of the day, the market will tell you where interest rates are going. And the market's telling you right now that they're going higher. Okay. And again, I assure you that you better learn to understand that the market knows all, because the market is never wrong. Price is the direction. Okay. So you can think that the market may be wrong. You can think anything you want. But at the end of the day, this is the price. And when this market closes today, okay, wherever it closes is the price it closed at. And you can say, oh, the market's wrong. And guess what? You're wrong, because the market will tell you exactly where it is and what it should be doing. And if you're going to continue to fight that, you're going to continue to lose money. Okay. It comes down to being that simple. Okay. Here's price, whatever product you're looking at, doesn't matter. They're all the same. I'm going to trade. It's somewhat the same. Okay. What the hell? Hold on a second. Hold on 1 second for me. Hold on 1 second. Okay. So anyways, so price. That's the action. That's what we worry about. And other than that, you got nothing to worry about, because that's what it always comes down to is where is the price? Why is that be bothering me? Okay. Hold on 1 second. I'm sorry, guys. Just got business to take care of. Hold on 1 more second. Dang it. Dang me. Hold on 1 second. Hold on 1 second. Okay. Anyway, so price is price. That's the action. That's what we're doing. And at the end of the day, we can't change what price is. And when traders used to work for me, and they'd come and say, well, the market's wrong. Well, the market's never wrong. The market is always right. And that's the story that we have to deal with. Okay. And price will always tell you, because when the price closes, if you're on the wrong side of the market, guess what? You lost money. Okay. And if you're trying to fight that, okay, then you have an issue to deal with. Okay. And that's certainly a case in which we have to deal with. And again, we got to go back to price and price action, no matter what the market is, because that will always tell us what the markets are doing. And right now, the markets are consolidating, and they're kind of churning. They're off their lows today, and they're probably going to try to attempt a couple of bounces here and there. So we'll see exactly where they go from here. But at the end of the day, this is what we're watching. And of course, keep an eye on the VIX, the volatility index, because that will give you a general idea of where we're going to go from here. But in the meantime, this is about what markets do. And this is what we always are paying attention to, because the price action, the activity in markets is like a map. Okay. It's a roadmap that puts you out there, that tells you what you should be starting to look at and assume where the market's going to go based on the information given to you, not based on your opinion, but based on what is happening on any given chart. Okay. You should have a general idea of what is happening. I mean, this is innocuous cocoa futures. They're just consolidating. Okay. It doesn't matter. So we know that there's a consolidation pattern here. They're consolidating into an uptrend. Okay. Live hogs, they're trying to break out of this consolidation pattern. So again, these are, no matter what market you look at, because remember this, it's called universal price. All charts are the same. All patterns repeat themselves. And the shortest time frame always has to resolve itself into the longer time frame. It is that simple. Okay. When we do this is that you have to focus on what the facts are right in front of you. Okay. Because this map, no matter which one you're looking at, pick a chart, any chart, you'll see the same patterns over and over again. Okay. And when you look over and over again, you learn to create your trades from that. And for example, when we're trading with my people in the morning, with my members, we're repeating the same process over and over again. Okay. That's all we're trying to focus on, is to repeat the process. Okay. And when you learn to do that, okay, you again create and put yourself into a better position at all times. And that's all you can do, is to create a position of high probability. That's our focus, and that's what we have to do. Okay. And it's all about what is in these charts. And again, you can look at from a very short-term time frame, from you can go as low as, you can go lower, but 1 minute. Okay. And what's the 1 minute chart doing? Okay. Versus what's happening in the 5 minute or 4 minute. Again, they all change. If you're prepared for that change, okay, then these all tie to how fast or how active you want to trade into the market. Okay. And these are things that are important for you to understand. And at the end of the day, markets are about what markets are about. And you have to recognize that at all times, is the issues and things that we're trying to get done, because it always relates back to this big old map, the price market, the price action in the market, and what we can watch. Okay. And if we do that, then we are certainly putting ourselves in a position of much higher probability. Okay. And again, that's what it's about. It is about the probability of what can happen and what will happen and what we're going to do about it. Okay. And that's something that's very important for you to understand at all times. Okay. Be prepared, be ready to act, be ready to do your thing. Okay. Because that's exactly where it comes to. Okay. That's exactly what we look for. That is what we're trying to do at all times. And when you get away from that, you certainly, what did I take you from the wrong screen? It should be on this screen. You got to continue to watch this. This is exactly the patterns that you watch, no matter what the frame you're watching. Okay. Again, here we are in 4 minutes. We're in consolidation. Okay. So while we're looking to trade this, well, I'd be looking to maybe sell it up at the top end of the range here. Okay. Possibly buy it here. Now, I'm not telling you those are trades you should be making. I'd like to see some more significance here. You're looking here. You see we're on some support here. So you might get potentially a little bit of a bounce here. You might get a potential little bounce here. Okay. And that is something that, again, we're trying to always focus and have an understanding of what markets are going to do. Okay. And if you continue to put yourself in that position, you will continue to be the person and the trader that you want to be. Okay. The minute you start to violate those concepts and the things that you're trying to do is your first point or your first place of failure. So watching these 4-minute charts is something that we do, and we do this on a regular basis because, again, it gives us a greater idea of what is going to happen next. And I think that is the importance as a rule to follow, because really what you're trying to do is you're trying to, again, create the best opportunity for you to have the highest probability to go ahead and make money, okay, within the market, okay, but at the same time, while managing your risk that is part of the market. And that's why we use, to be active, I use these 4-minute charts that you're watching, because that's kind of what we use as a spot and something that I like to trade off. It's a little different. Not many people trade off of 4 minutes. So we're using these as guidelines. And right now, as I look at these patterns, I don't see much of anything that would want me to create or make any particular trade right now. Okay. I think that this is something that you have to, again, it's part of recognition. It's recognizing what you are seeing. It is recognizing what you are doing. Okay. And that becomes the entire key to what we're doing as traders, is to add and put ourselves in position to be successful while watching the price action. And we're going to leave this up for a minute because now you're starting to see a little bit of a pop in the S&P. Okay. And maybe we'll get a trade. Maybe we'll make a trade here. Again, I don't know. I can't predict it. I can only sit back like you are and watch this. Okay. Now, again, there's really the volume is drying up right now, as you can see. It continues to get lower. So, okay, so what do? Well, we sit back patiently, because you don't get rewards for making lots of trades. Okay. This is not a business that is about making lots of trades. It's a business about making a lot of good trades. Okay. And trying to be overactive is not part of our game. It's not what we're trying to do. We're trying to, again, create positive shots, positive probabilities, and good opportunities to make good, solid trades. And I think that, moreover, tells you the story of where we are and what we're trying to do. Okay. And that is always going to be something that you have to be prepared and ready to go, because, again, we're just watching. Now, look, if we get some volume here, it might become a trade. Well, let's see. We're going to watch for the next almost a minute and see if it creates the opportunity that I'm looking for. But certainly it's showing the potential. Okay. It is certainly showing the potential that maybe something will be there. Okay. And if it gives us one, we'll take it. Again, I'm not afraid to trade. You saw me trade the other day. You see me trade 2 or 3 times on here. So if it gives us the trade, we're going to take it. Now, right now, it's not. I need a little bit more volume. But possibly I've still got a few seconds up to see if it's going to be the opportunity. And certainly, we're gonna go ahead and take a whirl at it. Okay, so I got to go back down to my 1 minute. Okay, and see. So I need to see a red bar. Okay, which will then potentially trigger a sell for me. Right now, there's nothing for me to do because it's still going up, and I can identify that by what? By watching the roadmap and the footprint. Okay. Again, these are things that we do on a regular basis so that we are prepared and ready to go. And so now we're going to look at where we are and what we're going to do. Okay, and let's see. Right now, no trade yet. Still waiting for the potential opportunity to show, and it has not shown yet. Okay, so anyways, right now we sit, we watch, we wait, and there is no trade approaching. So we'll wait for another couple of seconds and see. But certainly it is looking like it could potentially get there. And if it does, we're going to be ready to go. And it really becomes, that simple, is learning the method that you want to trade and being prepared to make that trade. Hey, Ruben, I'm going to have to cut this short, but I'll stay another couple of minutes, but I got an emergency I got to take care of. But I'm going to wait till this trade plays out, but I'm going to have to cut this a few minutes short. I'll stay another 5 minutes or so, but I got to take care of some problems. So let's see if this trade plays, and I'm going to make it if it does play. Okay. And I'll tell you what to do if I have to leave before it gets there. So I got to wait until this bar finishes and closes. Okay. Okay. And all right, I got a trade. All right, and then my stop is going to be in the S&P at 44.63. 44.63. Okay. Now, what I'm going to look for is if it pulls back to about here, I might move my stop. I might get stopped out first, but if it comes back down to around 55 or 54, I may then move my stop to potentially break even. We'll see. My entry was at 56, so let's see what happens. Okay, so right now I'm about even. Okay, and again, this is something that we're watching. This is the area I'm watching on the upside. Now I get my stops in place, and I'm not adjusting that higher. My stop can only come down from there. So I'm going to take the loss if it's wrong, or I'm going to be able to adjust as we come back the other way. And right now, I'm right. I can't take it off here. I mean, I could, but I could make a small, tiny profit, but that's not what I'm looking for. Okay. I'm looking for it to trade down to about 54, and then I'll go ahead and put my stop in at break even, looking for it, boom, and there it goes. Okay. And looking for it to didn't quite get there, but if it gets to 54, I'm going to put my stop in at break even. I'll lock in, enough to cover my costs and my positions. But then at the same time, I will also be able to manage that trade. But you can see how it's trying to get down to that little bit of a 54 level. Okay. And that's where we're going to go from. That's how we're going to trade off of it. Okay. As we continue to watch it. And sure enough, it keeps bouncing back and forth between there. Okay. So it won't let me get my stop in where I want to get it in, but I'm going to wait. But pretty soon, I'm going to throw in the towel. Okay. And I'm going to go ahead and put my stop a little higher and still lock in a little bit of a profit, because I'm not going to sit here and wait, okay, and just sit here waiting for them to give up. I'm going to have to make a decision, okay. And now I did take out, and I did take a profit, and I'm now done. And Ruben, sorry, babe. Sorry, everybody. I got to go. I got an emergency to deal with. Have a great day. Appreciate you, and I'll see you on Tuesday.